Hello and welcome to another update video about Bitcoin. So I'm always happy when Bitcoin drops, at least until we have reached the target area, because it just means we're getting there faster, which is amazing. I know a lot of other crypto channels and crypto groups. They are getting frustrated when this happens, when we see quite strong drops. They panic, but hopefully on this channel we are either happy or at least prepared for it, because we are finally getting closer and closer into the direction of the target area. That is what we've been waiting for since November, and we're getting closer and closer. Now, Bitcoin dropped yesterday below 35k, and we're going to take a look at that. That obviously had another impact on altcoins. If you remember, last weekend we had the altcoins really dropping strongly, and now we can see that they make new lows. So it's an exciting day, because this is also for altcoins exactly what I've been telling you for weeks, that we're going to see lower prices for altcoins. And of course, short-term upside potential always there, but first of all, short-term upside potential is only in a downtrend corrective nature. So you're working against the trend. So the overall direction is down, and we have not seen the low yet. That is pretty much my view for all altcoins, or at least for 95% of all altcoins that I do cover. And let's take a look at Bitcoin. So Bitcoin I showed you yesterday here on the chart, or let me just the big picture for anybody who's new on the channel, and why we don't need to panic. So overall, I've been showing you here since I think we dropped below 60k. That was sort of a magical level from where the uptrend, when we were back here in November, where the uptrend got invalidated. And then from around about 60, or was it mid 50s? I can't remember, to be honest. This triggered the downward scenario, and this is in which we have been in, and this is also in which I think we are going to complete this downward scenario by getting into this target area that we already put on the chart back in November. And this target area is the 20 to 29k area. And what is so important in this scenario is that we are getting below the low of that we made in June, and that was around 29k, a little bit lower actually, I think around 28.7. Why is this important? Because overall I see this whole thing, the whole development here, as an ABC correction. Yeah, it just needs to load here. Where we had our first impulsive wave here in wave 1, and we completed that in April. That was a blow off top according to various indicators. Then we came down in a wave A, moved up in a wave B, huge bearish divergence on various time frames, absolutely huge bearish divergence. Let me just show you. I think it was even on the weekly. Let's see. Yeah, you had a bearish divergence on the MACD first of all, an absolutely massive one on the weekly. And pretty sure also on the RSI, yeah, you can see that here. So the momentum didn't even get that high anymore. So absolute important indicator here. But it could have obviously gone much higher. But as we then got into the retracement, into the correction, the sell-off scenario was triggered around 60k. And from then on, we have been talking about these absolutely massive corrections with price levels that people couldn't even imagine back then. So remained consistent on this channel to talk about this price area here. We've come down in a massive bear flag here actually, yeah, and that broke out to the downside as well as expected at some point here. For a short period of time, it looked like we could break this and make a little bit of a lap of honor into this green area here before we come down. This is the alternative scenario, and that is going to die if we drop below 34.5k. Now this is exactly the level where we found support today, so I'll leave it still on the chart. Yeah, so it's technically also with that wave count still possible that we could get here and then come down. Yeah, this is the alternative. Primary expectation is that from somewhere here we are currently maxing out what this wave down can do, that we retrace, come up into this area. That is the primary expectation, and that isn't changing, because in every move down you need a corrective wave up. But I can't tell you how low this wave will go. This is assumptions. Yeah, when we have the low in, then we can calculate where the wave 2 is going to go. Then we have a wave 3 coming down, wave 4 up, wave 5 down, and that should complete the overall correction. And afterwards we should be able to go to new all-time highs. Now that can take a while. We can spend quite a bit of time. We can spend months in this target area, yeah. So I don't want to give you false hopes here. It can really take a while, and I can't really give you time frames. It is just a guess. What we can do is, though, I think quite accurately specify target areas. And we are getting there, obviously, closer and closer. There is not much more space between the current price and that target area. It's only 18 or 17.5%, yeah? And the calls that the low is already in, they have become quieter and quieter. I'm sure they come up again when we make this corrective move up in this wave 2 before we come down. But honestly, so far it's playing out. We had a lot of comments that the low here was already in. Again, they have gone quiet for now. And again, it's fine. We can discuss about all things, but my view has been consistent. And I've said the low isn't in yet. We just haven't made that swing low yet that we need to see. And we haven't had that capitulation phase that we need to see. And also from an Elliott Wave count point of view, this would have been a so-called running flat pattern, which is extremely unlikely. So therefore, we are looking here at a so-called expanded flat pattern, where in the current larger move down, we just need to get into this yellow area. Can we get below it? Absolutely. But it's too early to talk about that because we need to see how far these waves come down. And we can specify this target area, of course, further if we get closer to that moment, yeah? So I'm personally always happy here when prices drop. I won't be happy when we get towards the 20k target area and still dropping, but we get to that. At least everybody was prepared for these prices by following this channel. All right, so you can see how very well the price adhered here yesterday to the support levels that I made you aware of. So we had here the descending triangle. We had a broader descending broadening wedge. Within that, we had a descending triangle. So after my last update, we directly broke down here. So I showed you here this descending triangle, showed you that this is actually after downtrend, quite a bearish formation. But on the other hand, you have the rather bullish descending broadening wedge. In the end, if you have a bullish and a bearish pattern together, it doesn't matter. Yeah, there is no conflict. You have to wait for the breakout. Yeah, because nobody has a crystal ball. At least my crystal ball is still not delivered. We dropped below this support level here at 35.07. And I told you if we drop below that, the next support will be here, support at this descending wedge. That worked out. We retested the triangle support as resistance, quite a significant move, and then dropped down to that 34.5k level. Now in the current scenario, we shouldn't drop below that, but to be honest, it's possible, right? It's possible, and the next support would then be even, so it would even be more bearish than I expect, which is hard, okay? Next support would be that 33k level. That is really the last straw it has here, and if we drop below that, then I mean, then we're pretty much there, then we're pretty much in the target area. Showed you here that the wave is currently maxing out pretty much what it can do. And how do we calculate that? Well, we take here from that wave 1, take the Fibonacci extensions, and we can see that here in that we obviously came to the 300% extension already. That was broken. That was also why we, I guess, had some support here. And the next extension would be the 3.618, where we can just double check if I put the 3.382 in. And these are sort of the key extensions that we use here to measure the wave 5. The wave 5 is definitely extended. Let me just find the 3.382. Yeah, this is pretty much where we currently find support, a little bit higher than that. That is the previous swing low where we found support. So this is the level also we talked about a few times, but just finding support above the 3.382. And obviously if we drop below that, then the 3.618, that is sort of, the maximum I would give that wave 5. And if we drop below that, I would really need to look at the wave count. That is something even more bearish than I expected, but that's fine. We all knew, or maybe not knew, but we all had the assumption that prices will go into this area anyway. From my point of view, the faster it happens, the better. Anyway, if this here is a wave 1 down, which it should be, then the wave 2 is still coming. It is just a little bit delayed. Now, I can't tell you, and that is always the misunderstanding, I can't tell you how much extended this wave will be. That is what the market decides. But when the low is in, then we can calculate the corrective move up in a wave 2. Bear in mind, this is the first wave of a move down, and therefore we just need to be patient and need to see how low does it go to really calculate that wave 2. That will now come down a little bit more, and I will adjust that when I know where the low is in here, or when we have more clarity. Or maybe I can even adjust it now by taking the Fibonacci retracements. So this target area for the wave 2 is calculated just by how far the wave 1 is coming down, and I did set it between the 50% Fib retracement and the 78.6. This is quite a likely area where a wave 2 would get into. Let's make that area here a bit smaller. Don't know why it's that huge. Anyway, that would be here, sort of in the area between 41.2k and 50% is 45.2. This is where I would expect that area, the price to go into. And again, we can specify that further as we get closer to it. Yeah, but what you can already see, the Fibonacci levels get extended, that area gets wider the lower we get, because it just extends the Fib levels. It's just mathematics. From here then, at some point we should turn around. I would even give it a 33k in the current environment, because we haven't seen a huge reaction to it. Today obviously weekly candle close as well, so there will most likely be some volatility towards the end of the day. But it's good to see some movement, and in my view it's good to see some altcoins getting closer to their target areas, because also Bitcoin is now getting closer to its target area. And to be fair, as I just showed you, it's only really like 15% left, 16-17% for Bitcoin to reach its target area. Now, the last time Bitcoin was down here at 33k, we were massively oversold on the daily time frame. So you can see it on the RSI here massively. And when we were here, I told you we will get a corrective move up now. And I think that was reached. I think it was maxed out what the price could do in this corrective move up here. And that was because we were massively oversold, and the wave count suggested it as well. But we were massively oversold here. We were at around 20 on the RSI. So Bitcoin at such a low level, I think, was the first time here since March 2020. So we are pretty much at the same level again, but the RSI is now at 33. So let's say even if we drop to 33k, the RSI is probably still not oversold. Or maybe we get to 30, but you can see the difference between 20 and 30. So 10 points on the RSI, indicating or shows you why this move up was so important, because it had to bring the RSI back up, because the RSI at 20, when we were at 33k, it just did not support any further major price drops into the area between 20 and 29k. Now obviously we are here at around 33. We are already quite low, but we would get closer, or we can get obviously closer with that RSI to the target area than we could with an RSI that was at only 20. But exactly for that reason, I do expect now a larger move up into a wave 2 before we come down again, because we need to bring that RSI a little bit higher. Otherwise, it will be tricky to get into the target area. And we need to see what the market makes out of this. Certainly still downside potential possible, but the RSI is already getting nearly oversold. But just so you understand me correctly, we are very, very close to the level that we were here end of January at 33k, where the RSI was just much, much lower, which limits the downside potential. So very interesting what's going on here at the moment. And in the very short term, what we need to see, I go to the hourly chart. So key support level I just mentioned to you, it is that 34.5k level. If you lose that, the next support will be 33, and that is the low from end of January. I could imagine if we drop below that, we will have some kind of a capitulation. So we are back in the wedge. It has now a chance obviously to go back to the resistance level of the wedge. That would be around 35.7, 35.8k, and above that further increases are possible. In the first instance, I would say to 36.5 and then 39.2. So this is currently my view about Bitcoin. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership and maybe even the trading course I'm currently uploading on the website. Thanks a lot for watching. Bye bye.